Now we are joined by Mr. Bhavik Mehta, Chief Market Analyst at Century Financial. Welcome, Mr. Mehta. Happy to have you back. Let's start with this decision by the Biden administration to add 35 Chinese companies to the blacklist, to the sanction list. What does this mean, and what are the implications, first economically?
So the current action by the Biden administration, the US in effect, should be seen against the latest backdrop of China approaching the WTO appellate body against the US October ban on the US companies exporting directly to the Chinese chip makers. So what has basically happened is what started with the Trump trade war related thing, which started from aluminium, chemical, steel. It has blown to a full on Cold War sort of conflict. So the primary concern that the US is currently having is of national security. US basically doesn't want China to be a major geopolitical player as far as Asia, as far as the global affairs are concerned. So the basic fear of high resolution, high quality US and European technology, chip technology going to China, and Chinese company in turn making the high quality defense projects, and those defense projects being used against US and its allies. So this is where the entire conflict has basically come out to. And going ahead, you could see counter rounds of attack by US and China against each other. So this could include public slamming, more bans, more inspections, as well as the conflict brewing to other sectors as well.
Mr. Mehta, now speaking of the escalation in the technology war, we heard the commercial restrictions on semiconductors and as well the parts to make chips on Chinese companies. Now we started with Chinese companies, speak of 35 Chinese companies that would be added to this list. What are the sectors, for example, that could be sanctioned, and what about the type of companies? And then we will speak about the sectors or the technology sector, but what about the chips and how to build them? Now, what will be next?
So as we've seen in the past, last year already Nasdaq, NYSE have gone on to delist major Chinese companies that they feel have been acting as a more of a penny stock kind of thing. So firms specifically belonging to a banking financial services sector which do not have much of revenue, but which have shown sudden spike in their local listings. So stocks belong penny stocks, basically companies with small revenue, which have very opaque structure and not major public details available. Those are the companies that the US is likely to target first as far as the listing is concerned. Now, as far as the sector is concerned, the stocks in the sector may belong to tech, banking, financial, insurance, or even some new technology sector. But the main issue at hand, what the US is trying to address is it wants to break down the Chinese monopoly on the global scale.
Now, Mr. Mehta, in this case, the expected response, for example, by China.
Right. So China, I think, so has recently announced a $154 billion package to support its local semiconductor industries. This includes in the form of tax cuts, 20 to 30% subsidy to major industrial plants. So what China is basically trying to do is major names like Alibaba, Tencent, or even local names like Yanzai Memory Technologies. It's pushing these companies hard and fast to develop indigenous technologies, chipsets that match the European level. But then again, the problem is, let's take off a basic one of the major Chinese semiconductor company, SMIC. At this point of time, it's able to produce the chipsets with a 90 nanometer resolution. You talk about the major leader like ASML from Netherlands, which has a manufacturing prefabrication facility that is able to produce chips as low as 3 to 5 nanometers. So I would say China has a long way in covering itself. It still relies on imported machinery, imported fabricated sets to develop its local chips.
Thank you very much, Mr. Bhavik
Thank you.
Mehta, Chief Market Analyst at Century Financial. You joined us from Dubai.
Thank
Thank
you.
you, and until next time.